Homeowners, have you refinanced since initially buying your home? Then you might be familiar with how a typical mortgage refinance works. Or maybe not. Did you know that there's not one but two different types of mortgage refinances? Rate and term and cash out. And today's video is all about the pluses and minuses of a cash out refinance. But before we get into the video, roll the intro. Hello and welcome to the channel. I'm L.Grant, a licensed mortgage advisor, and today in this video, you'll learn the pros and cons of a cash out refinance. So make sure to watch till the end. When you hear the word refinance, you might think of a standard rate and term refinance. It's the most basic type of refinance mortgage lenders offer. The rate and term refinance means your lender takes your existing outstanding mortgage balance and pays it off with a new mortgage loan for pretty much the exact amount with a few caveats. As an upside, you get better credit terms, meaning a lower interest rate or shorter loan term. Now, it might be surprising, but there's a second type of refinance that can be more beneficial under the right situation, which is called a cash out refinance. And much like a traditional rate and term refinance, your new loan is still going toward paying off your existing loan balance. But what's unique is that a cash out refinance allows you to take out more money than what you currently owe on your home. More money out of nowhere? How's that possible? Well, the difference between the new loan amount and your outstanding mortgage balance that's being paid off will be paid directly to you, or can be used for various other purposes. Now wait, before celebrating, there are some limitations that do apply. For example, lenders won't usually allow you to take out a new mortgage that equals or even exceeds what your home is actually worth. For the most part, you'll be able to borrow anywhere from 70 to 80% of your home's market value. Pretty good, right? For certain people, a cash out refinance can be incredibly beneficial to those looking to consolidate debt, finance home improvements, or even start a new business venture. So if you're in the market to see if a cash out refi is right for you, here are some pros and cons that you should consider before submitting your application. Let's jump into the pros to start. First of all, it's cheaper than a second mortgage. Traditional retail lenders spend a lot of money marketing fixed rate home equity loans and lines of credit. These are essential second mortgage finance solutions that you can use against your home. Since the debt is usually in a second lien position behind your original mortgage, it can sometimes be referred to as subordinate financing. The problem with taking out a second mortgage is that it often has much higher interest rates than a simple cash out refinance. You also must juggle multiple payments. If mismanaged, it can throw up your entire budget. Home equity lines of credit can also create an environment where credit is more readily available. By the time you realize it, you could rack up thousands of dollars in new debt with your home hanging in the balance. A cash out refinance circumvents the need for a second mortgage by doing everything through one loan at a much better rate that can be locked in for a much longer term. Another way you could benefit from a cash out refinance is to use the funds to pay off high interest debt. Now, if you think about it, credit cards and personal loans are unsecured loans, notorious for charging outrageous interest rates. Using the funds to pay off those balances could help you save thousands in accrued interest. The other factor to consider is that paying off other debt also frees up additional cash flow in your budget, making it easier to allocate funds to other monthly expenses. By eliminating all those balances with a cash out refinance and combining them into one loan with one payment, you can potentially boost your credit score and also gain flexibility in your monthly budget, feeding two birds with one stone. Borrowers often use the money from a cash out refinance to complete larger home improvement projects or renovations. Are you dreaming of that brand new jacuzzi? A cash out refinance can help you better maintain your home and even help it continue to appreciate over the years through incremental improvements. Even if you don't consider any home improvements, there are other ways to use the money from a cash out refinance. For example, you might want to finance your kids' college education or even start a new business or buy some crypto. Joking, no financial suggestions here. Anyway, using a cash out refinance to fund any life events could be a smart idea. Now let's talk about the cons. While a cash out refinance sounds excellent on the surface, the truth is that it's not suitable for everyone. Just like with a traditional rate and term refinance, a cash out refinance requires you to go through the entire application process all over again. Also, while many lenders made the experience as seamless as possible for borrowers, the truth is that it can still take anywhere from 15 to 45 days to close on your refinance. This can vary depending on the lender's size and how much volume they can typically handle on a given basis. A new application also means new closing costs and new credit terms, so expect to pay a whole new round of closing costs, although the potential savings usually outweighs the out-of-pocket expenses. While borrowers can save money through a cash-out refinance in most cases, it's important to note that a cash-out refinance often comes with a higher interest rate than a regular rate and term refinance. Now, we all know life can be unpredictable. One minute you're on top of the mountain, and the next you could be going through a personal hardship. Finances can also change in a blink of an eye. When considering a cash out refinance, it's essential to understand that you will have to qualify for the new mortgage debt. And how it works is your lender will want to analyze your ability to repay the loan plus your credit and assets all again. Recent changes to your employment status or blemishes to your credit can make it harder to qualify, so keep that in mind. After all this, you should be a little bit sharper on the pros and cons of a cash out refinance. But if you still have questions on how this works, I'm available for consultation. Just follow the link in the description below and book a call with me and my team. Also, if you found this video useful, kindly hit the like button and share this video with someone who you think might need it. Let me know in the comment section if there are any other mortgage topics that you want me to cover on this channel. Oh, and while you're there, don't forget to subscribe to the channel and turn on notifications. Thanks for watching, and I'll see you on the next video.